Okay. 2012 question number 1. What are the principal reasons for demanding money? Very easy, guys. They're asking you for the 3 motives. What are the 3 motives? One reason you demand for money is for the transaction motive, right? That is for your day-to-day transactions. Another reason why you demand. Now, what is demand for money, guys? Demand for money is how much of money people have in the form of cash itself. So why are we having money in the form of cash? One reason for transaction, for our day-to-day transaction. Second reason is for the precautionary motive. Okay, transaction motive, precautionary motive, and the third we have is the speculative motive. This is in case there are any future investment opportunities to get in, to invest in those. That is why people keep cash with them. So all what you have to do is write these 3. They're not requiring an explanation also, but if you really want, write one line. You can say, for example, transaction motive. This is the money. This is the money that people keep with them for their day-to-day transaction. Precautionary. This is the money that people keep with them for any emergency needs. Speculative. This is the money that people keep with them to make use of any investment opportunities that might arise in the future. If you want, write one line. Maybe it looks a little better, but they will not expect you to do that because they are simply asking, what are the principles? If they ask you outline, then writing that line is essential. Here they've just asked what. Or if they say state, just stating these 3 items. Outline, you have to write a small line about. Briefly explain, you'll have to give a small paragraph also. If they say explain, then paragraph, diagram, give everything that you know. So remember the question verb. Okay, part 2. What is near money and what are the components of near money in monetary aggregate? What is near money, Lamai? Near money, we say, what? What are the keywords that have to be there? We did this yesterday in the mock exam series also. What should be there? This is highly liquid assets. Highly liquid assets that perform the function of what? Performs the function of performs the function of store of value. Can it be directly used as a medium of exchange? Yes or no? No. Cannot be directly used as a medium of exchange. So these main points have to be there, guys, in your answer when you define what near money is. Then what are the guys, when they say monetary aggregates, what does this mean, guys? M1, M2, M2B, M4. Monetary aggregate. This is M4. Yeah, M4. Does substitute money have? You mean money substitutes? We don't talk about liquidity there because that's just a temporary medium of exchange. No? Okay. They've said it in the question. Have they said M4? I have not typed it, is it? Monetary aggregates means M4, even if they say or not. Okay. So then, what are the components? M4 was mentioned. So what are the components of near money in M4, Lamai? Apart from currency held by public and apart from demand deposits, everything else is near money. Time deposits, savings deposits, the NRFC, the RFC, the deposits in registered finance companies, the deposits in licensed specialized banks, all are near money. Okay. So what and what? Now remember, M4 has what components, Lamai? Currency held by public. This has demand deposits. Then it has time and savings deposits in commercial bank. Then it has NRFC, 50% of that ideal. Okay. Then it has resident foreign currency accounts. Then it has deposits in licensed finance companies. Then deposits in licensed specialized banks. All of these are M4. From this, which of this is not near money? Currency held and demand deposit. Everything else is near money lamai. So what can you write? You can write time deposits. Time deposits means fixed deposits. Huh? You can say within brackets fixed deposits in commercial bank. Then you can say savings deposits in commercial bank. Then you can say 50% of NRFC accounts. We can say what is NRFC, guys? Non-resident foreign currency. Why do we only take 50%? Remember I explained why only 50% of that. What is an NRFC account? NRFC account is, let's say your father is working abroad. He earns in dollars, no? So he can put those dollars into a NRFC account. So then your mother in Sri Lanka can also withdraw. Your father also can withdraw. Let's say your father is in India. So he can also withdraw money from that account. It's like a joint account, lama. So your father has made a non-resident foreign currency account, NRFC. So in Sri Lanka, your mother can withdraw, go to BOC and withdraw whatever bank. Your father also from there, he can withdraw. Father puts his salary, both of you all share. So then it's not fair not to put all the things into Sri Lanka's money supply. Because from that money, your father who is in India also takes some money. Your mother from here also takes some money. That's why we don't take the entire thing. That's why we take 50% of the NRFC account balance into money supply. Now, if the question says NRFC accounts or NRFC treated as a domestic liability, then you can take the entire 100%. There were some questions in past papers. I can't remember. If I come across, I'll show you all. Okay. If they say NRFC treated as a domestic liability, then 100% you can take. That means they have already deducted the 50% and given. But if they just say NRFC accounts, you have to take only 50% to your money sum. Then number 4, you can talk about resident foreign currency banking units, whatever money they have. Then you can say deposits in registered finance companies. Number 6, deposits in licensed specialized banks. All of these will come under that. So deposits in time and saving deposits. Okay. Why do you say the near money is highly liquid? DD is one that has the highest liquidity. Yeah, we are not saying that near money is the highest liquidity. No, I'm not saying that. I'm saying it's highly liquid. What does highly liquid mean? You can easily convert into cash. I am not saying that it is more liquid than demand deposit. I'm saying it's highly liquid. Okay. Registered finance companies and licensed finance. Yes, same thing. Yeah. So licensed, registered finance companies or licensed finance companies, same thing. No? These LOLC and all of that. Cannot directly in the sense. Now you can't use this money for transactions. No. Can you go and let's say pay someone with your fixed deposit? Can you go and pay someone with your licensed specialized bank or time and saving deposit? You can't. No. You have to convert it into money. Then only you can use it as a medium of exchange. You can't say, no, for example, I'll pay you with my savings account. You can't do that. But now with, for example, with more financial innovation coming, you can argue, sir, debit card money goes from the savings account. No, there is a part there. But theoretically, you can't pay with this one. Okay? This is correct to give like this. Less liquidity in converting into cash. No, it's highly liquid, guys. Don't say less liquidity. If you're writing less liquid, you should say less liquid compared to cash. Now, cash is what is perfect liquid in you. You can say less liquid compared to cash and demand deposits. It will be very specific. But if you just say less liquid, it's wrong. Because near money in, it's not the most liquid. Most liquid is demand deposits and physical cash. It's not most liquid. It's highly liquid. Liquidity means how easily you can convert something into cash without making a loss. Okay. Yes, most means number one. Okay. So when you say most liquid means that is the most, number one. Highly liquid means not number one, but it's very close. So be very careful with the words that you all use. Is that okay, Laman? Near money and the components. Fine. Okay. All right. Then we'll go into this part 2. Assume that one of the commercial banks in the banking system has cash reserves of 200 billion, loans of 800 billion, and deposits of 1000 billion. Prepare the balance sheet for this bank. Disgrace. No, this is now. You all do very hard credit creation questions and come and they ask you to prepare the balance sheet. How do you prepare the balance sheet, Lamai? Now you have to be very careful. Now, when you can't just draw stuff, you have to label this properly. The requirement is to prepare the balance sheet. No. Now, so this side is assets. You have to label this. This side is liabilities. So under liabilities, you have demand deposits. You write the long form. That is 1000. On this side, you have reserves. How much? 200. Then you have loans. How much? 800. They are asking to prepare the balance sheet. So balance sheet can show as well. Okay. That is the most correct answer that you can give. 1000. Now you'll get your 2 marks. Label the assets and the liabilities, total it and show, right? That is nicer to do. And you can say, if you really want, you can say rupees in billions. Okay. You could have written those also. The perfect answer. Because this question is not hard, but you will lose marks if you, let's say, do some nonsense. Should we name the T account? Oh, yes, if you want, you can say, okay, you can say, you can label this as balance sheet. That also is better. Okay. You can label it as the balance sheet and you can show. Okay. So be very careful now. That's why I'm saying when you all get your question in your A-level paper, practice this when you all do your mock exams with me. So every question, you have to get the fullest mark. Don't just jump in and, quickly do something. The question is very easy, nothing hard. But you might sometimes just do it for the sake of doing it. You might not get the full marks in vain. No, these are not things that you don't know. Then part B. If the bank maintains a reserve requirement of 12%, what is the largest loan it can make? Think. If the SRR is 12%, how much is required reserves? They have deposits of 1000. Okay. So how much is required reserves? Required reserves are here. Required reserves are 1000 into a 12%. That is how much? That is a 120 billion. How much is their actual reserve? Actual reserve. How much do they have actually? Okay. Actual reserves. Actual reserves they have is a 200 billion. Okay. So this is the balance sheet again. Okay. Actually they have 200. Required is only 120. Then how much of excess do they have? That is what they can give out as loans. That's what they're asking. No, they're asking what is the maximum loan they can give. So they can give a maximum new loan of how much? A maximum new loan of 80 billion. So what is the largest loan it can make? You can say the largest loan it can make. Largest loan that can be made is how much? Rupees 80 billion. How the 80? It's the difference. And then if you want to, if you're not very sure of what if they're asking total loans, you can say as a result, total loans in the bank would be 200 plus the 800 plus the 80, 880. You can give a last line like that. Not needed also, but you can do. Is that fine, guys? Very easy question, no? Not harder. No, you don't have to add the 800. They're asking what is the largest loan that it can make. No, that means largest loan it can make means in the future, but it can make now. So largest loan it can now make is 80. You can say total. Do we get credit creation question? You all get case. Why do you think we are doing all of this? So you can say therefore total loans, if you all want to be very specific, total loans after giving out this can say 800 plus 80 can be 800. Yes, 2021 and 22 there were no credit creation questions. MCQs were there though. There is a high chance that it can now be converted into essay question in your year. Okay, right. Part 4. Now see, same thing. What factors could cause the actual expansion of money supply to differ from that given by the deposit expansion multiplier? Deposit multiplier is saying, look here, it will multiply by 5 times. But actually money supply doesn't go up by that. What are the reasons, guys? Same question that they had before, no? Same thing they're asking in a different way. Why? Why will the actual expansion be different from what is told by the deposit multiplier? Because there can be cash drains. Remember, we learned this before 2011. Go back and see. Cash drains. Then changes in the SRR. Right? Changes in the SRR. Okay. There can be no demand for loans. Right? Demand for loans. Banks might maintain excess reserves. Okay. So all of that what we discussed in the previous paper, you can write this. Yes, credit multiplier is a deposit multiplier. 1 over SRR. By how many times will your deposits get multiplied? If one new deposit comes in the banking system, how many times does it get multiplied at the end of the day? Okay, right. Is that fine? 4. Shape. Very easy, basic, direct question. Then part 5. Explain how can we say central bank issuing currency? Not really, right? They're asking for the other thing. Why are you talking about central bank issuing currency? Not needed. Right? Explain how open market operations are conducted to contract money supply. We learned this in the MCQ papers also, no? How do they conduct open market to this one? How do they do this? How do you conduct? Okay, first you start off your answer by talking what is an open market operation. That's how you start your answer. Okay, so you can say what open market operations are what, Lamai? Okay, open market operations are what? Open market operations are where the government does what? Government buys and sells government securities, no? So open market operations are where the CBSL buys and sells government securities. Then tell me, in order to contract the money supply, what should they do? Yes, government securities are financial instruments, treasury bills, treasury bonds, those. What should they do? Should they sell or should they purchase? In order to contract the money supply, what should the CBSL do? To contract. The CBSL should do what? Should sell government securities. Securities to whom? To commercial banks, and maybe primary dealers. I'll say PD. Not reverse repo, repo. Reverse repo is where central bank is buying. Okay. So this can happen in two forms, Lamai. What are the two forms this can happen? Either you can do a, yes, I did 4. Okay. It can either happen as a repo transaction where the central bank is doing a repurchase agreement. They are currently selling, saying in the future date, I will buy back. Or they can do a outright sale. So here where you sell, no future promise to buy. They can either do a repo or do a outright sale. Both are open market operations, buying and selling. Then what happens is now you have to explain how does this contract money supply. So you need to say, okay, remember we explained. So when the CBSL sells, we did this in MCQs, no? Commercial banks will have to buy. Outright means, guys, they sell without the promise of buying back. Now, in a repo agreement, you're selling a treasury bill and bond, saying, I will buy back in the future date or repurchase. I will repurchase it from you later. Outright is where, let's say there is a permanent excess liquidity, they will sell. No, it's sell. That's it. There is no saying that I will buy back later from you. You do whatever you wanted. Right? No, you don't have to go to that detail because they are asking you how they contract the money supply. That part is essential. Okay. So how does it contract money supply? Explain. So when the central bank sells treasury bills or bonds, or when the central bank conducts open market operations and sells government securities, what happens? Commercial banks will have to buy. So when commercial banks buy such government securities, the reserves of commercial banks tends to decline. As a result of the reserves going down, what happens? The ability for these commercial banks to give out loans will now decrease. This would lead to a contraction in the money supply. So you have to put your own words. You don't have to give my words. This story, you have to practice writing it in your own words. Practice it the other side also. In your year, they can ask, what can they do to expand the money supply? Who knows? Yes. Remember, I explained repo, reverse repo in the MCQ paper. Repo is where, okay, repo is where CBSL sells with the promise to buy back. With the promise to buy back. That is what you call a repo agreement. Repo longer form is repurchase. I am selling this to you now with the promise to repurchase it in a future date. Repo doesn't mean purchase. Huh? Repo means central bank is selling. So if they say central bank engages in a repo transaction, what does that mean? Central bank is selling treasury bills and bonds. Later at a future date, they will buy. Then what is reverse repo? Reverse repo. Reverse repo, we call this a reverse repurchase. What is this? This is where the CBSL buys. CBSL buys government securities from the commercial banks with the promise to do what? With the promise to sell at a later date. They'll say, okay, I will sell it to you later. That's what is there. Can we say interest rate increase? Yes, you can say that. So when the reserves go down, the availability of funds in the market comes down. So you can even say the interest rates will rise, loans will go down. Fine. In the current student, did CBSL issue government securities purchase? Last year and all, what they did was they sold government securities. They wanted to bring the thing down. Opposite of outright sale is outright purchase. So repo, reverse repo, if there are temporary things. If you were there in the mock exam series, go to last Saturday doubt clearing session. I explained that in detail. It's there in the doubt clearing session video last Saturday. Okay. Right. Is that fine, guys? That's what you need to explain for 4 marks over here, how they had open market operations and this. Then, okay, 2012 is also done. Not that hard, no? Now, remember, guys, if you are a weak student, you don't have to get 20 out of 20, no, Lamai. If you even can get 15, you can still get your A, no? Don't you think? Just see, just look at the question and see. 2012, right? First question is reasons for demanding money. This you all know. Okay, this you all can do. Normal stuff, transaction, precautionary, speculative. Then, what is near money? That also you can do. Components of near money. Let's say you don't write all the things. You might, let's say, get 3 to 4 marks. Well, practically think if you are a normal average student, you can get, let's say, 3 to 4 marks here. This, I think you can get the entire 3. No problem. No, you can write the 3. No, okay. So here you can get the entire. Then this one, balance sheet, I don't think you all have a problem. If you know the very basics, you can get this too. Okay. This also, how much of loans that it can make, that also I feel is not at all hard. Okay, you can feel they have 1,000, 12% they have to keep. The balance they can give out as loan. That also you can get your 2 marks now. Okay. Then what factors would cause this? Now, if you have done your past papers, you know the reasons now. Same thing. So let's say you don't write the full thing, you only get 3 marks. Okay. Then this one. How is open market operations conducted? How they? It's easy, but we'll assume below you only get 2 marks for this also. Right? I'm giving the worst possible situation. Okay. Right. Now just add up and see. From the 20-mark question, here you have 3. Here you have, okay, let's say this also is 3, 6. Here you have another 2, 8. Here you have another 2, 10. Here you have 3, 13. Here you have 2, 15. See, I deducted so many marks for so many things, and still you're getting 15 out of 20, no? Don't you think? Now, 15 out of 20, you get 5 of that, you get your A, no, man. 75. And first thing is unit number 7 is hard also. You have unit number 1, 2, 3. Now, 1, 2, 3, you can get more than 15. So what I'm trying to tell you is it's easy. You don't have to. Now, for the ones who are smart, 20 out of 20, I'm just telling for the average student. Even you can get 15 out of 20, not hard. Now, did I sugarcoat and did I give you all more marks for any question? No, see, even in this question, I only gave you half the mark. But I pretty feel you all can, even if you all write a nice answer, you all can even get 3 marks. But I gave you just 2 out of 4. Even for this this thing, which is an easy question, right? For writing 4 points like cash drain, changes in SRR, no demand for loans, I gave you only 3 marks. I cut 1 mark. Then even for this question, I cut off marks, no? Near money. Again, something that is easy. So what I'm trying to tell you is, don't give up. Econ, I'm telling you, is an easy thing. As long as I am there, as long as you're willing to do what I say, that A is almost certain. You need to put your effort. So you need to study the unit, you need to have a note, and then the more and more questions you do, you can get it. Okay. During outright sales, CBSL pays interest. Outright sale, central bank doesn't pay interest. Central bank sells. When the government issues, only government has to pay interest now. We'll not get into there now. Okay. So outright sale is the same thing. Now, in a repo, what happens? In a repo, you're selling with the promise to buy back later. In an outright sale, you're selling only. No promise to buy back. You sell, it's right. It's over from there. In a reverse repo, you're purchasing with the promise to sell later. In an outright purchase or outright buy, you're just buying. No promise. That's the thing. Primary dealers are the ones who can deal with these treasury bills and bonds. Usually, commercial banks are primary dealers. There are, for example, have you all heard about this, guys? In Sri Lanka, have you all heard about this company called CAL? Have you all heard CAL? Just Google and see. They are also one of the primary dealers. So primary dealers are the people who can buy treasury bills and bonds when it's issued from the government. Now, for example, when the central bank issues a treasury bill, we can't buy. I can't buy. Public can't buy. Primary dealers only can buy. So certain commercial banks are primary dealers. Certain primary dealer firms are there, like Cal. There are in Sri Lanka. There is close to around 10 primary dealers, banks and some other firms. Only 10. So if I want to buy a treasury bill or bond, I have to buy from these primary dealers. They will resell it to me later. That's how it works. Now, for example, this is how it goes, guys. Central bank issues a treasury bill. Let's say central bank says, okay, if you buy my treasury bill, I will give you 12% interest. Central bank issues a 12% treasury bill. Primary dealer buys it. Primary dealer sells it to us at only 10%. Primary dealer tells us, look here, I have a treasury bill like this. Come and buy from me. I will give you 10% interest. They keep the 2% margin. Sometimes they will keep the entire thing with them. No, this is annual. Okay. They will keep the entire, they will itself keep the bond with them until it matures, or they might sell it to the public. Both of that is possible. So some primary dealers, they will buy and they will keep for them, because that is, they are for them also a return. No? Or they will sell it to us and they will make a small profit margin there. That's how it goes. Okay. Yes, BOC is a primary dealer. These auctions are very interesting. It's not in our syllabus, so we'll talk about that some other day. This when the government, now even recently, 2 days ago, there was a treasury bill auction. So when there are these treasury bill auctions, guys, people have to bid. Okay, so for example, BOC will come to the auction and say, look here, I am willing to buy this much at an interest rate of, let's say, 10%. HNB will come and say, no, I want 12%. I will buy this much, I want 12%. So likewise, people will bid. It's a secret auction. No one knows how much each other bid. Okay. And then central bank will give it for the lowest. Whoever who bids the lowest interest rate, that is the cheaper thing for the government. So government gives those treasury bills and bonds through the central bank, the people who bid the lowest. So Cal will say, okay, I will buy at 14%. And also, guys, these auctions, you can't say you can't go. Everyone has to go for the auction. All the primary dealers, when the government is issuing treasury bills and bonds, I can't say now, for example, let's say I am BOC. I can't say, nah, my gawa salli naha. I am not going this time. Ilang auction eකට I'll come. You can't do that. You have to go. But how can you avoid, guys? Think of the practical. It's very interesting. I don't want to buy bonds, but I am forced to go to the auction. How can I make sure that I don't get any bonds? Exactly. I bid the higher interest rate. In my auction, I say, look here, I will buy bonds if you give me 20%. Central bank will say, I will give it to the other people. You don't know. That's how it works, guys. Very interesting story. So now that is why now most of our clients are also these primary dealers. So they are very interested what will happen to exchange rate, what's going to happen, should we buy it at this rate now, should we bid it at this rate. Now bidding rate is also important, because that rate makes a big difference, because that's their profit. No, sometimes if you bid too high, you might not get that deal. If you bid too low, loss for you, because other people have got at a higher rate. And first thing is, no one knows. Now BOC doesn't know what they bid. Even at the end of the auction, no one knows. So at the end, how it will happen is, it's like this. For example, let's say government has issued 100,000 worth of treasury bills. Let's say 100,000, simple example. So let's say, for example, Capital Alliance, they have got 20,000 at 5% interest. Then let's say BOC, they have got 30,000 is the final results. BOC has got 30,000 at, let's say, 6% interest. Likewise, until the total becomes 100,000, they give it to the lowest people. And something connected to this only is the bond scam. Remember there was a bond scam? I don't know if you all are very aware. They were accusing Ranil and the whole set of a bond scam that happened. That also is connected with this bidding and stuff, guys. Again, very interesting stories. So that's how it basically goes. Now, no, not Ranil doesn't invest in this, but they have firms backing and all. No? They manipulate a little and they can do. So the primary dealers, they invest. Okay. So when will your A-levels be held? Not sure. Most likely Jan. That's what I feel. Okay. Anything else, guys? 2012? Safe, no? In practice, these are very interesting stories, guys. but our syllabus is very theoretical. So what to do? Okay. Maybe one day if you all are working for one of these primary dealers, if you are like a finance guy, most likely you'll be working for those investment banks, stuff like this. Okay. Right. Will it? So now